Thank you so much for joining us today. It seems like there's kind of a confluence of macro factors out there whipsawing the tech stocks. How do you make sense of this, and where do you see the buying opportunity given the inflection point that we're in right now?
Okay, thanks, Leslie. You know, we have seen a bifurcation in terms of tech stocks. Now I'll make a comment across all tech stocks. Higher quality names have held up better in this market than lower quality names. It's just emphatically true. You look at consumer tech, which is where I focus. You know, the stocks that have held up the best have been the Googles, the Amazons, Facebooks, the Apples of the world, and it's the Pelotons. It's the newer companies, the companies that traded those price to sales multiples, not PE multiples, that have been much more challenged. So, if you're worried about portfolios near term, you stick with the highest quality tech names, consumer tech names. And in my space, they have an acronym for it. It's called FAANG: Facebook, Amazon, Netflix, Google. I don't think that really changes that much. If we're trying to get a little bit more offensive and we're really look beyond this, assuming that there is beyond this, there should be, then you can lay more into names that I think are really dislocated here. I think actually Facebook and Amazon fall into that category, and so does Uber.
Given what we've seen, in recent days and over the last week or so with regard to COVID, do you think it's prudent for investors to go back to some of the trading behavior that we saw in the spring of 2020 and mid-2020, where people look to software names and a lot of tech stocks that may not have profits, may not have those quality identities that you mentioned, in order to kind of play off of this idea that people are maybe staying at home more? Mohammed Al-Erian on Squawk Box this morning said that's potentially something that investors should be considering.
I guess so. I hope we don't have to consider that again, but it's possible that we do. And, there are going to be some stay-at-home again names that probably pretty similar to the first stay-at-home names. It's, there'll probably be a boost to online retail, to at-home entertainment. That's where Netflix would come in. There are other names that would benefit. Those two come to mind. Maybe at-home fitness again too. Peloton, they just showed some major execution issues between then and now that make you just wonder about them. It's just anything more than a fleeting play on that stay-at-home trade. But I think you want to either, in this environment, you either want to stick with the highest quality tech names, or depending on your time horizon, if you can look 6 to 12 months out. This, like most of these big dips, creates great buying opportunities, like COVID did on. For good or for bad, but it did in March and April of 2020. It looks like we're getting a little bit of a similar, not that dramatic, but we're getting a little bit of a similar setup here.
Mark, Jim Cramer loved your book, and I think it's a great retrospective. And during that period of the time that you and I have been around, it does seem that the companies that come back the fastest are the FAANG stocks. And I wanted to get your advice on, when you see people shut in again, say because of a virus, Amazon has worked. You mentioned that. And yet people were worried that Amazon was having a weaker holiday season. Doesn't this, in the last 5 days, kind of make up for it?
It may well, Jim, and thanks for your help too on your input on the book, your feedback there. Let's see, what are we doing with Amazon? This stock is traded sideways. The way I think about it is, it was perceived to be a structural winner in 2020, and then this last year it's traded as if it was just a pull forward beneficiary. I think we're going to find out it truly was a structural beneficiary from the COVID crisis. And then this company is doing something very unusual in tech. They are doubling down on their core competency. They're adding more distribution capacity this year and last year than Walmart has in its entire history, and than Amazon has in its entire history. And I think we as consumers are all going to benefit from that, and we're going to react to it because we're going to get faster delivery, greater one-day guarantee, greater 3-hour, 2-hour delivery. And I think we're going to prove out this concept of shipping elasticity, i.e. the faster you ship, more people are going to demand. So I look at Amazon as probably the single best fundamental asset I cover. It's modestly dislocated here. I don't know why. If you're going to start buying consumer tech, I think you almost have to start buying Amazon here. Best, the largest TAMs, total addressable markets, really good proven management team, and they're going through the right investment cycle.